Pivot points are important price action levels that are used to highlight potential support and resistance and determine price direction. They use the previous period's high, low, and close to calculate the current period's support and resistance levels. These consist of a pivot point level, two support levels, commonly referred to as S1 and S2, and two resistance levels, referred to as R1 and R2. Most trading platforms will automatically calculate the levels for you, so it's not necessary to learn the formulas. However, it can be useful to understand how they are calculated. The pivot point is the average of the high, low, and close of the previous period. To calculate it, simply take the sum of the high, low, and close and divide that value by 3. Support level 1, or S1, is calculated by doubling the pivot level and subtracting the high from the previous day. Support level 2, or S2, is calculated by taking the difference of the high and the low from the previous day and subtracting it from the pivot level. Similarly, resistance level 1, or R1, is calculated by doubling the pivot level and subtracting the low from the previous day. Resistance level 2, or R2, is calculated by taking the difference between the high and the low from the previous day and adding it to the pivot level. Pivot points have two functions. They can be used to determine the current market bias on any given time frame. If price action is above the pivot line, it indicates a bullish bias. If it is below, it indicates a bearish bias. Pivot points are also important support and resistance levels. When price action crosses above the pivot point, R1 becomes the overhead resistance, and the pivot point becomes support. When R1 is broken, R2 becomes overhead resistance, and R1 becomes support. Similarly, when price action crosses below the pivot point, S1 becomes support, and the pivot point provides resistance. When S1 is broken, S2 becomes support, and S1 provides resistance. Pivot points can be used to determine potential levels of support and resistance as well as price direction. They can therefore be used to establish both reversal points and breakouts. Pivot points always act as a secondary indicator to price action and are therefore best used in conjunction with other indicators.